Hi there, I'm Jennifer Lee, Senior Economist at BMO Capital Markets. There have been some notable changes on the central bank front. Just earlier this summer, almost all of the major central banks seem to be on this one directional path of tightening monetary policy. Over the last few weeks, or at least a month at least, that tightening path seems to have changed, at least the speed at which they're tightening. Let's take the ECB, for example. They managed to pull off a dovish taper. They extended the QE program by 9 whole months, but they slashed the monthly purchases in half, and yet managed to cap the euro's rally by not referring to it as a taper, but as a downsizing of the program. So that was an incredible feat, actually. The Bank of England just raised rates 25 basis points from record low levels, and by the sounds of the press conference, it doesn't sound like that there are in any rush to do it again anytime soon, although we continue to look for a couple more rate hikes over the next few years. The Bank of Canada, now that's probably where most of the changes have been quite notable. The Bank of Canada has gone from being very dovish to quite hawkish, and now they're back to being dovish again. After raising rates in quick succession earlier this summer in July and September, Governor Poloz and his committee stayed on hold in October, and they used the word caution in their policy statement. And I just want to make sure I'm getting this right. They cited not knowing for sure how the economy will react to recent rate hikes and to new mortgage rules. And as well, in a press conference later, he said that there are a lot of things that have to come together before we feel confident that we are all the way there. And indeed, we have seen some slowing in Canadian economic activity over the past few months. So momentum has clearly slowed. And I should also note that the word NAFTA had its own sentence in the press statement, which was quite telling. So all in, we continue to look for the bank to stay on hold for the rest of the year. That hasn't changed. We cut the number of rate hikes that we expect for next year by 1. So now we look for 3 rate hikes in 2018, followed by roughly 3 more in 2019. That, of course, is liquid. It's very data dependent, and it definitely depends on how the NAFTA negotiations fare. Now, what does this mean for the Federal Reserve? That is one central bank that actually hasn't changed its tune much at all, unlike everybody else, and probably with good reason. The U.S. economy has come in stronger than expected by many measures. The third quarter came in at 3.0% annualized, and that's pretty good, even with that hurricane hit. We're seeing pretty decent growth in consumer spending, inventories, net exports, thanks to stronger global growth, and capital spending. That, by the way, has been quite notable. We're finally seeing a turnaround in CapEx, so that's very encouraging. So that Q3 GDP result probably sealed the deal for a December rate hike, which we have been calling for some time. And we continue to look for probably 3 rate hikes in 2018 and a couple more in 2019. And I should also mention that it helps that it looks like tax cuts are possibly making their way through Congress by maybe the end of this year, but we shall see. And also that big question, which was who will be the next Fed chair in 2018? That question looks like it's being answered right now. Apparently, President Trump is giving the nod to Fed Governor Jerome Powell for that role. So if that is the case, then that is as status quo as you're going to get for the Fed, sort of having Janet Yellen stick around, of course. So we haven't changed. Again, we haven't changed our call for the Fed rate hikes, 3 more this year and a couple more next year. Of course, there are lots of risks out there: NAFTA, Brexit, Russia, Iran, North Korea, and I think I mentioned NAFTA, right? Still lots of risks out there, but the fact that the global economy continues to barrel along, that's actually really good news as we enter the final couple of months of 2017. Thank you.